invited Lorian Gamaroff. He is Mr. Blockchain in South Africa and has been doing this for a long time. So if there's anyone who knows what's going on in blockchain, fintech, big tech, he's sitting in the room. So we're actually quite honored to have Lorian, who agreed to join us today.
All right, well, thank you for your time. I hope you are comfortable. So I'm not really sure what all the levels of awareness around this blockchain hype is. Obviously, blockchain has reached a sort of frenzy in hype. And as Chairman was saying, you know, it's important to know what is relevant now. What is the best approach? Do you want to wait and see? Or are there pressing things that need to be attended to at this point? So what I want to do today is demystify this and explain it in plain terms so that you all can understand it, non-technical, and then you can then have the sort of authority to be able to make that decision yourselves. Obviously, there's so many voices in this space right now proclaiming every single thing that is going to be disrupted. Goldman Sachs saying it's going to change everything. And I would like to give you an impression, and then you can make your own decision about that. You shouldn't have somebody come and dictate what they think is relevant. You must be able to make that decision from your own thoughts and feelings. Okay, so I'm going to now give you this kind of walk through this. It's going to be fairly general. There's going to be two approaches that I'm going to take, because there are two very specific things here that are quite distinct. And the one is going to be blockchain. That is obviously the technology that promises a much disruption in every kind of industry, specifically finance. But then the other aspect of this is, in fact, the currency aspect, the decentralized cryptocurrency, as it's called, and that is specifically Bitcoin. So I'm going to give you a view on both and what the general perception is. Now, I've been studying these things for years, and I feel like that it's becoming quite plain to see, after having been embroiled in this hype, where those pressing things that you should be focusing on right now, where they are. And I'm going to try and give you that sense of it. So there's two things, the Bitcoin aspect and the blockchain aspect. I'm going to just now launch into the blockchain, and you're going to see after this, I promise you, you're going to be able to speak with authority and say, yes, I understand blockchain 100%. And this is what I think it's good at and what it should be used for today. And perhaps we can give it 5 years to wait and see what everyone else is harping on about. All right. So obviously, in its most basic form, it's a ledger. Now, you all understand ledgers. You all understand that a ledger records transactions, and that's what the blockchain is. And the reason why it's called a blockchain is that every 10 minutes or so, all the transactions of people sending things to each other, specifically in the Bitcoin space currency, there are a number of transactions that are created in a 10-minute period. Those are all grouped together in that 10-minute period and put into what's called a block. And then the ledger is updated. And then 10 minutes goes by and another group of transactions are created. And then that's linked to the previous block. And that's why we have this chain of blocks that gets created. Now, if you understand that, well, then you now understand what a blockchain is. What it can be used for, I guess that's now where it becomes interesting. So there are a number of blockchains. Those are just different flavors of them. And you can see that companies, including Accenture, but many different companies are coming up with blockchains that service different needs. So, for example, interbank settlement. There's a blockchain called Ripple, and what their primary focus is making it very efficient, settling money from one bank to another. And there are others which are doing all sorts of weird and wonderful things. And what we can do is we can explore some of those weird and wonderful things. Now, why is it called a distributed ledger? Because that ledger isn't stored in one location. Like, for example, in the central bank here, you probably have a data center and you store all the information and all your data in a single data center. Maybe what you do is you have a data center here and perhaps a data center somewhere else. But at the end of the day, it's all centralized. You own it. You control it. It's a centralized system. A distributed ledger is one where it's spread around, but also a very important word is decentralization. That is the most important word when it comes to blockchain and what makes it special. Because it's quite easy to have a distributed ledger. Those exist. Many companies, Microsoft and everybody has some version of a distributed ledger. But a decentralized ledger means that no single organization or entity or individual owns and controls and governs that ledger. And that's the kind of far out thing that we now need to come to terms with. And what makes this thing so powerful. Because what it's doing when you decentralize something, it means that you don't have a focal point that you have to trust. You don't have a single organization that you are now having to put your faith in to say, we trust that you are governing that ledger correctly and making sure that it's secure and doing all that sort of thing. Decentralization removes the requirement for trust. That's a very important thing to understand. And now when it comes to Bitcoin, and you can see that logo I've used there is the Bitcoin logo, what we have now is we have this ledger that's distributed around the world, and what's being passed all around on this ledger are these little tokens called Bitcoins. And I'm going to get into why people are considering Bitcoin as money and why I believe that that is in fact one of the areas that you should be focusing on now, not in 5 or 10 years' time, and you should take it seriously. And I'll get into why I believe that is the case. So I'm going to now give you a simple little picture. I'm sorry if you're from the back, I don't know if you can see, but everything else will be on top. I'm going to give you a simple use case on how to use a blockchain, and I'm going to incorporate every aspect of a blockchain. So all the different things that makes a blockchain useful and interesting and relevant. And in this one use case, and this is a trade finance use case, you're going to get it all. And at the end of the day, you can now say, all right, there were some aspects that Lorraine mentioned about a blockchain that were interesting and relevant to me, and maybe I can explore those. All right. So in this particular instance, I've got two participants. One is an importer, maybe it's a shop or somebody who wants to import goods, and we have a supplier on the left. Now, typically, if an importer wants to buy something from a supplier somewhere else, and they don't know each other, they don't have a relationship, they need to enter into an agreement, and the importer now needs to get a letter of credit from a bank to guarantee the supplier that if a supplier delivers those goods in good condition, according to the bill of lading, that the importer will be able to pay that supplier. The supplier wants that guarantee, and they get it from a bank. So you can now see how we've now created, there's two people who want to transact with each other, they want to have a relationship. We need to include some sort of trusted intermediary to manage this for them, and there are others, of course. So they need to enter into some sort of agreement. Now what a blockchain does, very interestingly, is that it allows people to enter into agreements where you don't need a third party to manage the terms of that agreement and make sure that those two participants have fulfilled both sides of the deal. So if you think about a bet, if I know you, you're my friend, and we take a bet on some sports event, well, we know each other. You know, if I win, you pay me. But if I don't know you, I'm going to need to bring in an escrow or a lawyer or somebody who could make sure that if I lose, I pay, and the other person pays if they lose. So we can now introduce for a blockchain the idea of a smart contract. That's the term, which basically is just an agreement with some provisions in it. And those can actually be running and installed onto a blockchain where it now executes the terms of that contract in an autonomous way, where you don't need a person to now make sure that the terms of that agreement have been followed. So these two now are going to enter into this agreement. And I don't know if you can see from there, it's a little bit faint, but in this contract that we've created, which we're installing onto a blockchain, it has 4 provisions. And if those provisions are ticked off, and whatever they are, then money is going to be paid. And let me show you now how that works. So the importer over here says, all right, I'm now going to enter into this agreement. Here's my money. And what they can do now is on a blockchain, you can tokenize assets, you can tokenize currency. You can say that this token represents 100 Rand or 1,000 Rand, whoever's issuing that. This is why a blockchain is relevant to a central bank. You can create tokens on a blockchain that actually represent real currency, like Rands, or they can be cryptocurrencies, some other kind of currency like Bitcoin. Then what happens is the importer goes and actually puts and deposits the money into that contract. All right, now it's sitting there, and the supplier can look at that contract and see, the money is waiting for me. If we fulfill all the terms, the money is going to be paid to me. No bank required, no letter of credit. All right? So now, a very important concept now in a blockchain is that you can have an identity. just like a bank account. You know, if I have a bank account, that account number represents me. And if I need to prove that it's my account, well, I probably would need to show that I have a password to that account. So there's a very important term in the blockchain, which is an address. It's like an email address, but kind of like a bank account number. Okay? So what the supplier down here now is doing is he's saying, okay, this is me on the blockchain. And you can see we've got now created a block, and the supplier has now said, this is my account number. Then the supplier goes and produces those goods. And then what they do is they now make a token. They issue a token that represents those goods. And they go and assign that token to themselves. Now let's see what happens here. And you're going to see some more properties around the blockchain. So as part of the terms of the agreement, we've got a trucking company. And if that trucking company is part of this agreement, what happens is they create an address or an identity on the blockchain. Those goods are then shipped to that truck. And what happens then is that the token is transferred. Now, can you see that there is this immutable record of where that token was? We can go back and look at this blockchain because blockchains by definition are public to all the participants. Anybody can now go and audit and make sure, where is this token now in this chain? Okay, and we can see where did it come from. And then now you can see the token now is in the second one. And we can go on and on. We can now, depending on the participants, you'll see how it gets created. But can you see at the bottom over here, we've now ticked. The token was now transferred from one participant in this chain to the next. And automatically, the contract detects this and says, all right, provision number 1, done. Tick. And then we go and decide to now send it to the shipping company. So there's the identity. The goods are shipped. The token is then transferred. And as soon as it gets to the next identity, the second tick happens. All right? And so on, until we finally get to the final destination. Let's just send it to the next one. The token is transferred. And finally, it gets to the warehouse of the importer. And the last item at the bottom is ticked. All right. So now this has all happened autonomously. We've created a little app, really, a bit of software, a little robot that's now managing this contract. No human intervention is required. No third party is now required. No trusted intermediary is required. And as soon as that token is received on this side, well, the contract is fulfilled. And so the money gets released. Now that wraps up the whole idea about blockchains really in a nutshell. That is everything that a blockchain does. It has identity. You can create identities for individuals. It's public to the participants. Everybody has this very clear, auditable trail of provenance of any currency or any items that get moved to that blockchain. This is it. This is what we've now been able to encapsulate in what a blockchain is. All right. If you understand this, you understand blockchain, and nobody can come to you and fool you and say, well, actually, it's all these amazing things, and you should be confused and pass. All right, so we can explain it to you. So I'm going to now quickly give you a sort of quick overview of all the different things now on all the different industries. I know that this is mostly not relevant to you, but I also want to show you that there are many industries right now that will be impacted by a blockchain, although the hype perhaps at this stage is a little bit too much. And I think reality is going to set in, and I'm going to in fact show you that there's a very clear hype cycle here. But payments, that is the first one, and this is the one I'm going to focus on.
Can I ask a question?
Yes, of course.
Go back to your previous slide.
Sure. We have to build it up again. Yeah.
That requires the entire ecosystem to subscribe.
Well, what you would do in this particular situation is that you would now have, let's say, these suppliers over here, or everybody in the chain. They would now have maybe a scanning tool or something. So what you'd do is you'd create some kind of front end, some kind of user interface. So this would have to be some kind of development that you would create. And you'd say to all the participants in that supply chain, listen, if you want to participate in the supply chain, when the goods are received at your shop or your warehouse, you need to now scan it in. And that scanning in is the thing that actually now commits work to the blockchain or commits things to the blockchain, activity to the blockchain.
Okay, that's the transaction that commits to it.
Yes, yes.
It doesn't mean that every party has to commit to the process.
No, they don't. Some of these, maybe in your contract, you've said, listen, there could be branches that happen, and they're not part of this process.
So, in the whole ecosystem, everyone has got to be willing parties to it.
Well, not everybody, but those parties that are going to participate in the terms of this contract. So the contract will define and say, that party is now relevant, that party, that one isn't, that one is. So now those relevant parties to the contract should participate in this. But you can have parties that aren't participating in this, and they just are irrelevant to the terms of that contract.
Correct, but I'm a delivery person. Or let's just say if I'm a shipper, the actual freight company, they would have to recognize that for this to work, they've got to be a willing participant.
Yes.
They don't have to be a participant.
Yes, and if they don't have to be, then they don't form part of the provisions in the contract that are defined. So that's how the contract will be defined. We would all come together and say, these participants, they do not want to be a part of this, so we're not going to include them. We're just going to include the relevant, because it might be irrelevant how the goods get to the shipping company, to the shipper. There could be another whole branch of supply chain that goes on there, but they're just not relevant. What these two people, what these two participants want to know is that it did eventually reach that shipping company, and then they must be a participant in this chain, to this contract.
Yeah, but the point is really that the shipping company would need to have some changes to its internal processes to either receive or to confirm receipt or to confirm delivery of the goods.
That's right. So now this is all theory. You see, everything I've described here, this is now what is theoretically possible in a blockchain world. Now, this is why I think that a lot of the hype is a little bit ahead of itself, because it is going to be difficult to now try and get everybody involved in this supply chain to now kind of move over into this new system. That's going to take a long time, and a lot of people might say, no, we don't want to.
And that's why I say it's the entire ecosystem.
Yes. Exactly. So this is all, everything I'm going to explain now, and in fact, everything around blockchain that exists in the world is all theory and POC, proof of concept. There's nothing that's actually been, really put into production and said, all right, here we have a working system, it works amazingly, we're saving money, it's incredibly efficient, here we have a successful case study. That hasn't happened yet. But this is now where people are going, what they're thinking. So absolutely I agree with you.
Okay, so I'm quite interested then in your comment around why do you say that this is something we need to be thinking about now?
No, not this. This is what I'm trying to explain blockchain, but this is not what I think is the thing that you must be thinking about now.
Okay.
Yeah.
Bitcoin that you say.
Yes, I'm going to explain to you why I think that is a very important thing for you to. Yes, so this is just me explaining blockchain, a typical use case, so you can get the principle.
Okay, but I suppose, Elijah, from a surveillance point of view, we now negate the impact, the use of a bank.
Yes.
And correct me if I'm wrong, but is this something that we need to be more wary of from a financial surveillance point of view?
Yeah, is it about what, Bitcoin?
Yeah, well, the whole blockchain.
No,
because
but
you are now-
here, for me, my view is that you have a number of stakeholders that are here. Others will be more powerful than others, because if you talk about the trade transaction where it's import and export, you must remember then you bring in SARS as well.
Yes.
We can agree from the importer, exporter, both of us, but
Yes.
SARS has to play a role.
Yes.
And you might find that this whole system can be scuppered if SARS doesn't want to come
Absolutely.
in. Because
Absolutely.
they are the ones that provide documentation for entry of
Yes.
document and proof of that. So,
Absolutely.
so you'll have that challenge.
Yes.
That if SARS stands away and say, you guys have developed, but I'm not ready, you'll have to wait until one day they are ready.
Yes, and
Yeah.
I agree, and that's why I think that the hype, and there's a clear hype cycle which I'm going to show you, the Gartner hype cycle, and even Gartner has said that blockchain is about to hit that trough of disillusionment, where it's like, oh, hang on, it's not going to do all this. All I'm giving you is a sort of theoretical use case. Of course, there's going to be regulation and security and buy-in. So those are the things that are going to delay all this urgency for you to now dive right in and start thinking about these things. But this is just an example, a use case to kind of draw all the elements of blockchain. So in your mind, you can now get and understand those concepts. But of course, there's going to be many years for all those things that you mentioned, and they're very relevant.
Because you find that in most cases, business moves are, you were saying, someone was saying that innovation is followed by regulations. But you find that always the private sector is always ahead of government departments.
Yes.
In terms of, but the government departments, they have control.
Yes.
And if they are not ready at some stage, then something has to stand until the government is on par so that the process can continue going forward.
Absolutely, I agree with you 100%. Yeah.
Just in terms of, I think this, if you look at the commercial banks, they already started to do POCs on this and investing. But there's some central banks that are also now partnering in a similar way. So it's the one is pushing the other, isn't it?
I think the key thing, and you might get to it when you get to Bitcoin, is in your example there are physical goods, and when you have to transfer it through a port of entry, SARS could play a significant role and actually enforce certain regulation. But when the goods being transferred are digital, that port of entry becomes very difficult to control.
Exactly.
So where do you then play the role? And I think that's the tricky thing. That's where Bitcoin and the other things come into play, when it's investments and money being transferred, which are not physically passed through a port that you can control.
But if I may comment there, I'm just thinking about that because exactly to the point that you're making around, payment systems, a payment platform is not just about the enabling technology. And Bitcoin is an enabling technology. And what will happen is just as ISO 222 and different standards have sort of emerging, which allow you to do more, to send more information, the opportunities will become apparent, but you still need to have the rules so that there's counterparty risk managed, so that, so all that, it doesn't, and I think that's your point about the trough of disillusionment, and maybe the sphere of delight for some banks, because they realize that they're not about to be completely disintermediated because they sit with the deposit. So that is still there, but I think the point around regulation here would be, what opportunities does the new technology provide to make the regulatory role, supervisory role, more risk-based, or to enable competition and innovation better? And that's probably, which is no different to SWIFT or Visa or MasterCard in a way.
We have learned if we ignore it long enough, it will go away. I just want to ask one thing.
Yes.
I'm trying to understand is, even in terms of theory, what's the difference between transferring of funds and transferring of token? I don't
Well, the theory here is that the relationship between the two participants at the bottom doesn't need to have some trusted intermediary to make sure that that's the theory. Yes, that is the.
Only theory, but that's the only one.
Well, yes, but also maybe perhaps this publicly auditable provenance trail, so we know where something has been. And some companies are doing that in terms of diamonds, let's say, for insurance. You can track where your diamond has been. So if you buy a diamond, you know if it's come from an ethical source.
But that's what money does for you. When money gets transferred, there's an immediate audit trail. So I don't see where the benefit of that.
Much of what you hear about blockchain, you'll be sitting in a room like this and somebody will be explaining blockchain to you and giving an exact example like this. And for those technically minded, you'll say to yourselves, but hang on, can't we already do this with the technology we have today? And I'm guessing 90% of the time, yes. This is the funny thing about blockchain. Now, my company is a blockchain company, and I spend all my time studying blockchain and trying to spread this information and trying to build POCs. But I have now come to this realization after years of doing this that 99 perhaps percent of the time when people say we can solve this with a blockchain, somebody in the room who is technically minded is going to say, but we can already do this. We can already do this efficiently, and it doesn't matter that, yes, we need a trusted intermediary, because a trusted intermediary makes something actually more efficient. There's a lot of inefficiencies built into a system that is trustless, and maybe we can explore that again. But I don't want to be pessimistic here. I don't want to burst the bubble. But I do want to be practical, realistic, and very importantly, the word we mentioned was, what should we worry about today? That's what you need to be thinking about, not what is a potential in 10 years or 5 years from now. What's necessarily relevant now? So maybe that's my sort of mission today, is to do that, is give you a feeling of a focus, something that you can think about, and the rest you can wait to see what goes on. This is an example, I believe, of a wait and see example. There are many banks doing these POCs, by the way. Barclays was very proud when they said we've now shipped some cotton or cheese or something to another country, but that's just a POC. I mean, you can POC this, till the cows come home, but does it actually add value? Okay, so let's see where we go with that. All right. Anyway, very good points. And let me continue. Maybe we can get to the what I believe is the real meat. Okay. Although you might think of me as a bit of a weirdo at the end of it. Okay. So the payment side of things. Now, to me, the payment side of things is probably the most interesting and the most relevant to your organization, because when we're dealing with finance, when you're dealing with money, that's your domain, that's your world. And I believe, and many people believe, that the whole point of blockchain was a currency. Blockchain it wasn't blockchain, oh look, we can do currency. No, it was, here we have a currency, a decentralized currency. And look what we can do with it. Oh, by the way, the technology that enables it is kind of interesting. Maybe we can do trade finance. That was how things came about. So when it comes to money, this is your world, and I think you should consider this seriously. And the money that we're going to be reflecting on just now is a decentralized currency. What a crazy concept. But maybe we can tease it out and try and understand why people are taking this so seriously and why I believe it has an enormous impact on you. I think maybe we can work that out. All right, maybe that's my opinion, actually. Why I should caveat that. In my opinion, why I think it has an enormous impact. So payments, very important. We're going to explore that in terms of Bitcoin. We can see that securities like Straight, the CSD, and JSE even now, Zarex, they're all thinking about securities on a blockchain. We know that a lot of CSDs around the world, a lot of securities companies, exchanges, are all thinking, oh, okay, if we can create a token on a blockchain, maybe we can issue a security on a blockchain, like a share or a bond or even funny things like credit default swaps or derivatives. Maybe we can issue those on a blockchain, and maybe we can make those more efficient and also more transparent. Because obviously a lot of issues that happen in the world with finances has been a lot of opaqueness. So maybe we can do securities on a blockchain. Smart contracts was an example I gave you where the legal industry perhaps is going to be impacted by this. A lot of people are saying lawyers are going to have to now become developers to code these contracts. It could possibly be. Internet of Things, maybe Internet of Things will be secured by blockchains. Maybe, you always hear the use case of your fridge running out of milk and buying for you. Well, you don't want to give your fridge your credit card, so maybe we can give fridges bitcoins instead. Identity is a very interesting thing. I remember I mentioned identity, where you can actually now have a private key that represents your identity on a blockchain, and maybe that can be used for you to share KYC type information, and you can store it in one central repository, secured by you, where you can be in control of it. Maybe that's a great use case. And I mentioned the provenance aspect, where you can now see an auditable trail of an item through a supply chain. Could possibly be interesting. Health records, securing health data, land registry. Maybe you could create a title on a blockchain, and then you could essentially, in a peer-to-peer way, send the ownership of your house to somebody. Theoretically possible. What does that mean? Is it possible? It's possible technically, but is it regulatory possible or legally possible? Who knows? Government. That second one is government voting. It's possible to create a voting system where you can see up to the minute a transparent voting count. So you can know if there's two candidates, some people are sending votes to that candidate, some people are sending the votes to that candidate. We can now see it in real time and in an unforgeable way exactly what each candidate has, what votes they're receiving. This is being explored. And imagine the kind of sort of disruption, or not disruption, but clarity or transparency that will create in that whole process, which a lot of us, I guess, feel we'd actually enjoy that. Then securing data, the integrity of data. Blockchain is quite good at this. One of its important qualities, which I didn't really mention, was immutability, where you can store information on a blockchain that nobody can change, and it can never be edited or deleted. So what you could do perhaps is take data in your own organization, and create fingerprints, they're called hashes, and put them in a blockchain, and then you can always prove that the data that you have has not been changed using a blockchain. So that's another interesting concept. And then we talked about trade finance. This is one that is just about decentralizing companies like Uber. Why do we even need an Uber? But anyway, that's if you could pay somebody directly. I mean, that's a theoretical possibility. I think Uber companies, Airbnb, are going to be disrupted by this, because if you can pay your driver directly, why do you need Uber? What's the point? At the end of the day, they're just a glorified payment hub. Anyway, we can explore that. And then finally, from a regulatory point of view, blockchains are actually cool from a regulatory point of view. You can have a transparent ledger that you can audit up to the minute. You know exactly what transactions are happening on that chain. So regulators that I have found are actually quite like this idea of a blockchain. From an auditing perspective, if you think about auditors, it actually enables a lot in those terms. Now, to just quickly leave from that, I just wanted to give you an idea of the kind of relative investment that's going on into blockchain. So the hype, when I say there's a frenzy, there certainly is, relative to the internet at the same time. There's much more investment going into blockchain. So maybe there's a lot of clever people out there that know something that maybe we don't, if we are a bit more pessimistic. And there's lots of companies now offering real services, blockchains as a service. Lots of stuff going on with legit companies offering very important services in terms of blockchain. But there's that hype cycle, and I wanted to bring it up. Gartner recognizes, if you know about the hype cycle, in any technology trend, that there's always this trigger where people start hearing about it, and then suddenly the hype sets in, and everyone tries to rush in. And then reality kicks in, and everyone realizes, hang on, this technology maybe isn't going to solve cure for cancer and all these things. And that's the trough of disillusionment. And then eventually we hope that something goes up to the plateau of productivity. So Gartner reckons that blockchain is there, and I think they're correct. I think that everything that you've said and the points that you've raised today are real concerns. It's not just, if life could just be solved in terms of technology, sure, maybe we could do all this. But life's much more complicated. There's so many more factors at play. Risk and regulation and tax and all sorts of things that go on to this. So I think that wait and see approach, in my mind, perhaps isn't such a bad thing. Now, I'm a technologist and I love diving into new things. But in terms of your focus and your expenditure, a wait and see approach in some respects isn't such a bad idea. So what's important now is identifying where you should be focusing. All right, and that's why I'm going to now get into the whole idea of Bitcoin. And I believe that after all this time, we're kind of missing the Bitcoin wood for the blockchain trees. Everyone's all obsessing about blockchain and how it's going to change everything. But there's that funny little thing that a lot of people, I don't know how you feel about this idea of Bitcoin. It's almost like too strange to be believed. It's kind of like, nah, it's got to be. It feels like a Ponzi scheme or a fad. Where we're all going to wake up tomorrow and anybody who's invested in this thing called Bitcoin is going to be burned. We just have a sense of that because we come from a world where money there's rules about money, like something that makes something money. What's stopping me from creating a token and saying, look, I've got money now and it's now worth 11,000 Rand a coin? That's what Bitcoin is worth right now. So just to try and make you feel like, okay, there's something going on here, there's a couple points that make something money. And funny enough, Bitcoin has all those properties. If we think about gold, now a lot of us, 45 years ago, the world went off the gold standard, and now we don't think of gold as money. But gold is money. It always has been for thousands of years. And what makes gold money is exactly the same thing that makes Bitcoin money. It's a great medium of exchange, being digital, better than gold, in fact. And it's durable, fungible, divisible. It's a great store of value because it's limited. That's one of the properties about Bitcoin. There's only going to be so many of them, just like gold. There's a limited amount of gold. And also a very interesting thing is programmable. In other words, you can make software that pays and does transactions and all this sort of thing. Yes?
Sorry, the thing about a digital currency is how do you know it's limited? Because that is the only loophole in this whole
Yes. Well, the most important thing about Bitcoin is that it's what's called open source. Now, that means a lot to people who, if you understand development and software engineering in general, you know that if something is open source, it means you can see all the rules that make it so. So it's very easy for you to go and look at and see what makes Bitcoin Bitcoin, and you can see very clearly that there is a hard-coded rule that nobody can change that says there will only be so many, and that limit will be reached in 100 years. I know this sounds space age, but that limit is going to eventually be reached. And if you don't, this is another thing about the Bitcoin software, it's very easy for you to copy it and make your own Bitcoin. All right. This is now right now. There's hundreds of these currencies that people have created around the world, and so a lot of people say, well, if there's so many, why is Bitcoin more valuable than others? Bitcoin has achieved what is called that network effect, or that mass adoption. Back in the 90s, remember the early days of the internet? There were competing internets. There was AOL and Prodigy and CompuServe, and then this little thing called TCP/IP, which wasn't really the best, but it eventually became the backbone of what we all understand today as the internet. And Bitcoin is more like TCP/IP than it is like MySpace to Facebook. You know, a lot of people say, well, maybe one day there's going to be a better coin that comes out, maybe. But right now, Bitcoin is now all over the world, and everybody's using it, and it has become the most valuable currency because of all these things and because it's useful. You can move it, you can send these tokens to anyone in the world, and because of the same properties that makes gold money that Bitcoin has, people, strangely enough, are considering it as money. Now, you might be pessimistic and you might say, oh, that's just silly, but there's a heck of a lot of people out there that have bought into this whole idea. And you know, ideas are amazing things. You know, the world is shaped by ideas, and the world changes with ideas. Suddenly there's this idea. Now, whether you believe it or not, it's happening. So what does that mean now for the bank? And what does it mean for the prospects of this? Now, I have another slide that I didn't really want to show because it's kind of digging into the ribs of this very organization. But I've given you these properties. But there's a lot going on out there in the world that I know you are aware of that maybe you think is just silly, or maybe it's just people's perception. But there are very real issues around the world that are driving people to this idea of a decentralized, ungoverned, trustless currency. And so if we just think about the currency that we have today, dollars and rands and things, do any of these strike a kind of note with you? Maybe some of these are real issues, maybe some are just perceived issues, but these types of things are actually occurring around the world today, and you can see that they are driving people into this whole idea of Bitcoin. Yes, of course.
You keep on talking about trustless currency.
Okay.
Yeah, and I'm trying to draw an analogy. I mean, if you know
Yes.
what is happening in Zimbabwe.
Yes.
Zimbabwe has got rid of the US dollar.
Mm.
And they are creating bonds. People don't want the bond because they don't trust it.
Yes.
That is going to look like the previous Zim dollar
Yes.
that became useless.
Yes.
So it concerns me, this issue of a trust, because people wanted trust in a currency.
No, what
But
I'm talking about
people
when I say trustless,
Yeah.
I mean you don't need to trust. Right now, Zimbabweans need to trust. Zimbabweans need to trust Bank of Zimbabwe,
Yeah.
Reserve Bank of Zimbabwe, that they're not going to go and start printing like crazy again. So that is you need to have trust in that currency. Now imagine if you didn't need to have trust in that currency. It worked the way you wanted it. So you didn't need to have this idea of trust. So trustless means that you've now removed that burden from somebody. Like you and I, let's say we're friends. We don't need to trust each other. Well I guess we trust each other because we know each other. But if you now break that trust, if you do something wrong, then that's the issue with our relationship. But imagine we had a kind of weird relationship where we didn't need to trust each other because we just believed 100% and we knew without a shadow of a doubt that we would never mess with our relationship. That's what I mean by trustless. Where you don't, the issue of trust doesn't even come up. That's what trustless means.
But I don't get this.
Yes.
If trust is not an issue, why is it an issue on the blockchain side?
The reason why, when we talk about the trustless nature of this, is because you can trust, okay, that the quantity, the supply will never change. At least it won't ever be hyperinflated or inflated ad hoc. So there you don't need trust anymore because it's built into the code. And also, I don't need to when I send you money, you don't need to have trust that I am the person who owns that money. If you think about a credit card transaction and a merchant, the merchant has a lot of trust issues because often they'll accept a credit card payment and suddenly there's a chargeback because no, that guy actually didn't own that credit card. So the credit card payment as it exists today is a trust-based payment. Also, if I pay you as a customer and you're the merchant, I've got to trust that you are not going to lose my credit card information. You're only going to take the amount that I owe you. So that's a trust relationship.
But if you see in your blockchain example, how many verifications there must be before there's trust in the delivery versus payment?
Yes,
and
but
now they opting for something that they can't even see, that's not tangible, which is
yes,
basic characteristic of money.
yes.
But they prefer it this way. I don't get it.
Because again, when you say it, you can't see it. Maybe it's not physical, tangible, but maybe the digital currency that you have today, your credit card, you don't see it. But you're trusting the system, right? You're trusting that the banks have it under control. Everyone's got the... Yes, because it's regulated. But imagine now you could have a system that didn't need regulation. Imagine you had a system that didn't need regulation because it just worked. It was a machine. It was this cold-hearted robot that just did the right thing every time. That's what it is. That's what we have. Well, I mean, you don't have to trust that. You don't have to believe
But
that.
you have to trust that the program needed to generate
Yes.
will be there in 20 years' time. Which
That's
I
true.
doubt.
That's true. So now your risk appetite. Where does it lie? Are you willing to put? Now some people like me.
The central bank, zero risk.
Right. So that's why it's going to be. It is going to be for us. Us this generation. But you can bet. We mentioned millennials earlier on. Maybe that generation and the generations below that are not going to have this kind of feeling that we all have and we need to have a giant building like this to be able to make sure that everything is under control. So I'm not trying to say that I'm not trying to convert you. This is what people are thinking, and this is why there's this price. And I'm just going to quickly show you this price. Now, this is one of the issues that a lot of us have. I mentioned a store of value, yes.
How does the value get created?
Supply and demand. It's gold, remember? So it acts like a commodity in that way, where if there's a limited supply and if there's a lot of demand, price goes up. And if there's...
To supply, you have to create it. So how does it get created?
Okay, so they'll be going more into the technical thing, but I'll quickly just explain it to you in a second. Just like a bank has computers out there that are processing transactions, you need something that is processing these transactions, and this is made up of volunteers who are all contributing their resources to this network to process transactions, and in return they are getting new coins that get created into the system up to at a predictable rate up to this limit. So that's how new coins come into the system, but it's a very predictable rate, and that rate will eventually peak a limit out at about 21 million in about 120 or so years. Okay. But that's more of the technical thing. But let's just quickly look at this price as a store of value. Now, right now, Bitcoin market cap with all the Bitcoins that are out there is about $10 billion. I don't really want to get into the sales pitch about Bitcoin at all. What I want to do is just show you that, I talked about the hype cycle. That's the NASDAQ composite. So Bitcoin, in fact, is acting very much like a tech stock, back in the 2000s. Remember that bubble? I was there, I remember it. I rode that roller coaster. And that's the Gartner hype cycle right there. Can you see? So these are the things that people are looking at. This is what I'm trying to show you, is that the world out there, without our approval or without, maybe we think is nonsensical, this is what's happening. So when I say to you, what is relevant to you right now? There's this funny issue of people thinking of Bitcoin as money. Now, right now, and Arif isn't here. Hello, Ayn. Ayn knows me. She knows that I have a business where I'm trying to now use Bitcoin, and I'm trying to enable people to use Bitcoin. But the funny thing is because I'm treating it like money in my business, but it's not defined as money, then suddenly there's all these funny things. And Ayn can definitely, I'm getting your name right, sorry, Ayn, sorry, met you once, so... So what are you going to do about it? I would love to work with the central bank, and I want to make sure that everything that I do is according to the rules. I don't want to ever ruffle any feathers. So we're having these discussions with Arif. I'm sharing them with my ideas that people want to use Bitcoin as money. They want to spend it as money. They want to send it to their friends as money. They want to remit it around the world as money. So what's going to happen about that? I mean, what rules and regulations are you going to put?
The other concern with this that comes to regulators
Yes.
is the issue of money laundering.
Yes, of course.
Is the issue of what is the other one? Financing of terrorism. That you
Absolutely.
Be able to trace and track the movement of this money, because
Absolutely.
they need it, because the perception sometimes that Bitcoin offers anonymity, and that's why these people that are involved in money laundering and terrorism, they don't want to be seen. They want
Yes.
to hide whatever
Exactly.
Money movement that's involved.
Exactly. So this is now why you should be thinking about these things. But what I want to now suggest, coming from the person who believes everything that I've been saying, to me these are real reasons to believe that there's something here that maybe we're missing. Now, how do we mitigate against all these issues that you've raised? Money laundering, terrorism, knowing your customer. How do we figure this out? Now, I can tell you, in the same way that the music industry and the movie industry for years have been trying to stop people from file sharing, you can't. If there is an internet out there, you are able to send somebody something, whether it is a file, a movie, a token that represents money. So what are you going to do now? These are your choices. Either you ignore it, or you come down on it and try and stamp it out, like the movie and the music industry, and look where that got them. Or you try and figure a way like iTunes did. You remember when iTunes was like, we're going to make MP3s legit. We're going to create a store and we're going to create DRM. Maybe that is the approach that you need to take, where you say, all right, there are people out there engaging in this stuff. We can't stamp it out. We can't control it. As soon as we try and do that, there might be a backlash and people go underground. Or maybe we can engage companies, or maybe give it some kind of legitimacy so that companies that are working with Bitcoin and allowing people to transact, you can at least have some measure of control by knowing what they're doing. So you can say, there's a company that is now allowing people to buy Bitcoin. Right, let them do it. Because now we can come to that company and say, right, what measures are you putting in place to know who those customers are and that sort of thing. To me, that is my recommendation to you. And this is something that you should be thinking about now. Not tomorrow, not the next day. Because it's happening. There's a sea change, this groundswell, and it might be happening under your feet. And in fact, it is. And maybe you don't realize the implications. Bitcoin is, in fact, the real disruption here. Blockchain, maybe. Who knows? I mean, I'm optimistic, but I know that these things are difficult. I think that hype cycle on blockchain is right at the crest. But I think this Bitcoin hype cycle is already further along, and people are now being driven into it. With all those other issues that I raised, with the negative interest rates and the war on cash and the bank bail, all these different things that are making people feel, I'm not into the system anymore. So think about it. That's what I just want to leave with you today. I can go on. Let me just explain to you what other central banks are doing. And essentially, it all boils down to creating your own digital currency. You'll see every central bank just about in the world, I think right now, is looking at this. And the only thing that they are working with blockchain is trying to think of their own type of digital currency, where they can also issue a currency and then have access to all those things that make blockchains efficient. The ease of use of being able to send it around, the auditability and the control. So this is essentially what central banks are doing around the world. You guys can perhaps explore this. Maybe this will be an interesting thing for your team or others to work on. But who knows? Again, whether this will be useful to you. That's I guess remains to be seen. But I think I'm going to leave it at that. Let me just show you that obviously there's a few issues, technical and political and legal and other issues around this that is probably also going to take years to try and figure out and flesh out. Okay, but that's kind of my thing about blockchain. I'm sorry I took longer than I should have.
Thanks very much, Florian. Thanks, Florian.
You're welcome.